What's up, everybody? We got a great show lined up today. I got another absolutely incredible guest that's going to be popping in about 15 minutes into the show. We got the Ethereum ETFs, which have gone live today. We're seeing some really great trading volumes so far already on those. And we've got a lot of absolutely wonderful things that we've got to talk about with these charts. It's getting spicy. It's heating up. Are you prepared? Drop a 1 in chat if you're ready to ride this market to the top. Everybody, we're going to be getting going here in just a moment. So right now, I want each and every one of you, drop an emoji in chat, drop bullish, drop bearish. What are you? Let's go. Let's ride into it. What's up, everybody? Welcome to the BitLab Academy Daily Show. We got to talk about what's happening in these markets because we're seeing the price action just chop around, making people excited, making them scared. And then we come over here on any sort of different setup with different indicators. We're getting a lot of the same signals across, whether you're looking at MACD, Market Cipher, BitLab Trading Stack. A lot of the price action is just trapping you up, trapping you down, much like if we come back out here to the broader picture here, all the way back here since February. We are not doing anything different. There's nothing different going on in the charts. I'm not sure what happened to my picture, but we're going to bring it back here in just a moment. I will get it up here right now. It's going to pop back in live. There we go. Awesome. So when we're talking about what's going on, especially with these Ethereum spot ETFs, the race is heating up to make sure that you are stacked in before this market absolutely runs away without you. We can see this right here looking at the price action. You know, we're still up for the week on many coins. We're starting to get a little bit of down action. Do not let these moments, do not let this chop you out because you're not sure what's going on. You should have a plan. You should have a strategy. And we're going to be talking to one of my, another one of my favorite crypto experts in the space. I got a chance to sit down with him for quite some time when I was up in Brussels last week, 2 weeks ago, and talk markets, talk life, talk these charts. How do we balance this as we move forward? How do we share information with other people? There's so much going on right now because make no mistake, I could not be more bullish about what's coming, but we got some things to dive into here before he pops in. So let's talk about it. What are the stories? Well, we can see from Ali charts right here, TD Sequential suggested that we might be getting a reversal here sometime very soon. This is Chainlink. And we're going to see this across many, many different Bitcoin, Ethereum, altcoins out there. We're going to see a lot of choppiness in the market as we are coming into what is, I think, going to be one of the most bullish times in history. Are we going to get the same sort of explosive gains that we saw in 2013? No. But the asymmetric risk opportunity right now is setting up. We've been talking about it here on the BitLab stream all the way since, you know, price coming up here. I was talking about this level, and this level. We've hit all three of these boxes and now reversed and come all the way back up through here, back through here. Now, this move to the upside, we're getting a little bit of that test. Remember, we still have that CME futures gap below us. We got a lot of considerations right now. I would not be so concerned. I would not be so concerned and lost in a 5-minute chart like this, trying to catch this as it goes up, to have it reverse, to have it reverse, to have it reverse, to have it reverse, to have it. Stop putting yourself in the reversal zones. Look at these longer term time frames. Are you stacking in? Because as this altcoin portfolio I've been sharing with you all, I'm trading on the side. And by the way, shout out to our channel sponsors, CoinW, our partners. Make sure you take advantage of that link that you see posted in the pinned comments there in the live chat. Make sure you sign up with that, whether you have a CoinW account already or any other exchanges. It's always good to have multiple accounts so that you can protect your capital. But also, if you sign up through that link, I also just reposted it in the live chat. If you sign up through that link, deposit $100 or more, you're going to have access to our live trading and live training sessions that we're going to be doing. I'm, of course, going to continue doing everything I'm doing here on the YouTube, but we're actually going to be doing those range trading, breakout trading, and basically breaking it all down with you and trading it. Shout out to Miss Yuli K. Got to hang out with her in Brussels as well. A wonderful little spirit being there doing big things in the crypto ecosystem. Shout out for being there. Now, where's my laser eyes? They're right here. These are my laser eyes because I'm laser eyed looking at these charts nonstop, every day, all day, breaking it down. If all you can get behind that, throw a 1 in chat. If you're a BitLab member, drop an emoji in here. Hit that like button. Let's go ahead and talk about what's going on here. Now, when we come back over to this altcoin portfolio I've been sharing with you all, I'm trying to, I don't want to say prove a point. I'm trying to show you, exemplify, you can stack into a portfolio and be patient with it. And if some of them drop, okay. You know, when we look back at the total three, come back over here, total three. Let's go to the daily chart, double click here. And where did we get in? We got in at that February 7th zone, which was roughly about right here on this breakout. The total three suggested, hey man, we're at this consolidation zone, bull flag. We traded this breakout. Not only, I won't say traded, we layered into those long-term positions. We layered into those altcoins right here, expecting some fireworks. We got it, you know, from this zone up. I mean, this is a 66% move on the total three, which represented some massive gains. We could see also, for instance, Aerodrome right here. We took about $6,000, $8,000 in profits and still have a good amount of Aerodrome in here. So these are going to be representative of, you know, some of this rotation that we've taken, but the majority of these we've been layering in as they've dropped because the God candles that are coming. So we just want to be patient with this longer term portfolio. Now, when we look at some of these other things, we got to talk about it. The ETF lows, Bitcoin ETF lows. As you can see, this is a very different scenario than we see right here. What is different? It's missing all of this red. So there's two different eras or two different epochs we've had so far in the Bitcoin spot ETF lows. One was this rotation of capital out of Grayscale. While we're still getting a lot of buying here, a lot of this is rotation into this buying. Now, this may look representatively like it's less inflows than we're seeing over here, but the difference is we don't have all of this negative flow that's paired with this. So this is actually a stronger position of these flows. This is equilibrium being found. And now we're actually seeing the true start of these ETFs represented by the data of the inflows, because that capital rotation has, for the most part, subsided. So as Alexandra G says, everybody click that like button, fam. Let's get that engagement going here on YouTube. So the algorithm will push us out to more people. Now, this is feeling very good, but we got to talk about, and we got to our guest coming on here in a couple minutes. We're going to be talking about what this means, not just this rotation, but also the Ethereum spot ETF. Also what's happening. We're not going to talk politics, but we have to talk about some of the things in the election cycle right now that are going to have massive impact on what the potential regulation, utility, integration, etc. of Bitcoin in the crypto world is stepping into this next 6 months. Now we've got a lot of people just popped in here. So shout out to everybody that is here. We're going to be talking about these charts. We're going to be talking about these markets. We're going to be talking about Bitcoin. We're going to be talking about all these levels that we've marked to the downside that have hit. And now are we about to resolve and have this massive breakout to the upside? Is this the most bullish setup we've ever seen? I do believe it is. And we've got to talk about it, especially the fact that Ethereum ETFs just went live and we're holding in a key position. So coming back to this chart, Epoch 1, quarter 1, with all the capital rotation from Grayscale, while we also had buying. Now, look, it's just buying. So we have to consider that. Now, shout out to Crypto Bad Fox also saying, good morning, y'all. Feeling bullish. That is right, everybody. Now, continuing on here, I just wanted you to notice the end of the Bitcoin bear pressure is near. Then up and away. Patience is your friend right now. And as Ali Chart said himself, he said, preach it, brother, preach it. Bring the good Lord in here because we're about to break so much higher. And when we see this, miners, what are we talking about? It's not just chart position. It's not just the framework that we're seeing of the patterns on the chart, but it's the Bitcoin miners are nearing profitability again. It's not just whether or not their machines are on or off. Because some of those folks have turned machines off, the difficulty level has come down. So the cost to mine Bitcoin has gone down. And we're also seeing the price of Bitcoin almost coming up to meet that equilibrium. We're right here, 67,000. The mining cost now is 69,500, trading around 67,000. So what does this look like in the charts? We can actually see if miners are on or off. So let's go to Bitcoin. Let's double click on this. Let's remove that. And I just want to come out here to the daily, zoom out a bit. We're going to turn on the, where's it at? The hash ribbons. We can tell by the width of these hash ribbons, see right here. And we marked this out. I forget which chart it is, but we marked this out on one of these charts that each time, I might have changed this since then. Yeah, each time, yeah, I've deleted a bunch of them. It's okay. Each time this buy has signaled, it's like the average is like 142% or something to the upside. I can't remember off the top of my head. But what we're watching here is if we double click on this, we can see this is the strength of hash. This is a moving average. We're seeing when the miners start to turn off because it's becoming less profitable, what we just have, the halving. What is the halving? The halving is a reduction of the miners' profits, what they get to compete to mine each block every 10 minutes. Their revenue gets cut in half. So then the price not moving yet also then forces, because that profit margin diminishes, some of those miners turn off their machines. And when they turn off their machines, they don't have as much revenue. When they don't have as much revenue, they tend to also have to offload some of that Bitcoin to keep their businesses open and not shuttered. In addition to that, you can also see that as the evolution of technology pushes forward and persists on, you also have a reinvestment into new technology to stay at the head of the curve. So what we're seeing right now, we're waiting for this to cross back over and give us that bullish sign, this buy signal, which is represented. We can do it again right here. Option V, option V, option V, option V. We can even just do this back out. Option V. Now what does this look like on the chart? Let's see. So look at this. Buy, up, buy, up, buy. This was in the middle, almost at the end of the bear market, but then we had the FTX capitulation. This marked right at the start of the bull trend. Boom, up. Again, right here, boom, up. You see what I'm talking about. So let's go ahead and delete those lines and understand that this data that we're seeing, it's not just, hey, we're doing astronomy of the stars, looking at no, we're looking at a combination of fundamental data, technical data, as well as combining that with measuring the psychological balance between the bulls and the bears. That's what doing technical analysis and fundamental analysis is. So you can forward project and create your probabilistic ideas about what direction the market is going. And in a second, we got an incredible guest that's popping on here in just a couple moments, who's, again, one of my favorites in the space. He's also been, very active in the social media side and sharing his analysis for many years. I got a chance to sit with him a few weeks ago at the Brussels ETC conference, and he is a smart individual. But now we got to talk a little bit before he hops in here about this ETH ETF. Well, okay, we got the ETF. Take the ETF out of it entirely. Let's look at the chart pattern. Let's look at what's going on. We've essentially had these base foundations. Look at this W pattern almost, and then a breakout of this zone, and then essentially a little bit of a retest back to it, but also a consolidation. So this is the bulls in charge, the bears in charge. The bears cannot bring it lower, so the bears give up. The bulls get to take over. There's a little bit of hesitation here with some profit taking, some hedging. And then once that hedging's gone, boom, up. What do we see again? Base foundation here. Similar scenario. Price action breaks out. Has a little bit longer of a consolidation. Breaks up. Remember, these markets are larger as well. Now, with all of this being said, this is what is likely to happen next. It's not guaranteed, but we're looking at this just on price action basis. When we look at this in conjunction with the data below, this is just the RSI, we're essentially getting this resetting of RSI similar to what we've seen in the previous cycle. So there's a lot of things lining up right now. The appetite for the crypto market and the awareness campaign that is being just absolutely blasted through every aspect of the world right now, with not only BlackRock and Fidelity and Jamie Dimon, who's starting to flip over, with also the presidential election going on and all this discourse about, the integration and support and adjustment of regulatory ideas and concerns in support of this industry, especially from the new presidential lead in the presidential election, President Trump, former President Trump and Vance. We are in the most bullish, most asymmetric setup we've ever seen in this market. Now, when we consider also we got to talk about some altcoins, and I might cover this a bit more tomorrow because I want to dive into the conversation here with Quinten here in just a second. But I just wanted to bring this to your attention. OKX is planning to delist 30 cryptocurrencies like XRP, SHIB, and ADA from the Bitcoin and ETH pairs. So just pay attention to that. There's a little bit of a, I don't want to say hinky business. There's a little bit of there'll probably be a little bit of a ripple through the industry on uncertainty regarding this for these pairs. And Franklin Templeton, we just had the ETH spot ETF go live this morning. We got the ETH eyes on here. And remember, this is what is Franklin Templeton, if you're wondering. Franklin Templeton. Let's see, AUM and age. So Franklin Templeton offers, not that what I'm talking about. Here we go. $1.53 trillion in assets under management. $1.53 trillion. That is incredible. I mean, this is a major tried and true TradFi institution. And, you know, when you got them posting things like this is one of those things. It's one of those dominoes that continues to fall in favor of the bulls. So we've got to be very careful about what we're doing right now. If we're trading in and out, trading this, let's be a little bit more patient about what's happening, because the end of this bear pressure is absolutely not only near, it is brewing for that ultimate absolute rocket ship to the upside. Now we got to talk about, look at this, the first 15 minutes of trading. Total $112 million traded. This is for the ETH ETFs. $112 million in the first 15 minutes. And then you come over here and this is who we're going to be having come on here in just a moment. Quinten right here. He says first half hour of trading. This was updated since then. 59 million in the first half hour on this ETF, and then 183 million in volume on Bitcoin. Now, one would say it's so much less, but when you come over and look at the let's say 60 million to 180, right? That's what, 1/3? Well, let's go ahead and look at what's going on here. The market cap of Ethereum, 400 billion to 1.3 trillion, just under 1/3. So relatively speaking, on the market cap sizes, this is incredible. But my question to you right now, if you're tuned in, if you're not bullish, I don't know what you're looking at. You're looking at the wrong chart. I want everybody in here. We got a big room today. Everybody hit that like button, hit that subscribe button, ding the bell. Remember, this channel, this stream brought to you by our channel partners, CoinW. We are going to be doing live trading and live training sessions that are free. All you got to do is sign up with that link that we have in the pinned top of the pinned conversation right there. I'm just posting that again right there in the live chat. Sign up there with CoinW. Get involved with us. That's how you access it. Just sign up, create an account, deposit $100 with that link that's right there in the live chat. But we got, again, like I said, we got an incredible guest that's going to be popping in here today. Somebody I've learned a lot from, and I really enjoyed sitting down with him at the ETHCC conference there in Brussels. So without any further ado, let me go ahead and add him right here. Boom, guest 1, guest 4. I got to add the face and the screen. Mr. Quinten Francois, how you doing, my friend?
Hey, Kelly. Happy to be here. How are you? I'm good.
I'm doing good. Everybody in the chat, if you can hear him, if you can see him, if he looks as beautiful as he is in person, throw a 1 in chat. I want to make sure you guys can hear and see. We always have issues with, Quinten, you're involved in markets. Did you realize that you'd have to become an audiovisual specialist when you got involved in crypto?
No, and actually I'm still not the specialist in that. Like, I'm using my webcam right now because there is some problem with longer term streaming of my camera. So I'm always using my webcam. But no, yeah, I think like yours is looking a lot better than
double.
No. Now I hear you again.
Yeah.
Okay.
So markets, we just got the ETH ETF approved, not only approved, going live. I was talking with TJ about it this morning, and I think a lot of people were speculating. It probably was there was a higher, it felt more likely that this would get delayed and not happen this year. But this is marking a parabolic trend we're seeing in the crypto markets on the speed, how the hard stance against crypto, especially in the US regulatory body, that has now shifted to, it feels like there's like this very quick increase in the integrations support and at least on some levels, some understanding on the regulatory bodies. How are you feeling about this ETH ETF spot? Is this something that you think is going to end up turning into another sell-off like we saw on the Bitcoin spot ETF? Or do you feel like the foundation of everything that's, brewing right now is too bullish to allow that to happen?
I think it's always like a little bit of a sell the news event anyway. So we saw the same thing happening on the 10th of January when the Bitcoin ETFs were approved. It was like in the beginning, there was not a lot of stuff happening. So the price dropped even a little bit. And then in the months after that, the price started rising to a point right now where the Bitcoin price is up compared to the day that they got launched. It's up over 50%. So I think we will see a very similar scenario for Ethereum. And I think it's even more interesting that we see the Ethereum ETF right now, or ETFs, 9 in total, that we see them right now because everything is lining up perfectly for altcoins. And I think this is also a very interesting thing to keep our eye on in the coming months, because I think it can definitely trigger not only a strong price increase for Ethereum, but I think it will drag the rest of the altcoin market with it, because the focus is now shifted from Bitcoin to Ethereum. And that's a very interesting thing, because like we saw when the ETFs were launched, it was all Bitcoin. Like the altcoins were getting slaughtered since March. So the only focus was Bitcoin. I think this will change as well. So very, very interesting times ahead. I think maybe a bit of a slow start as well, even though the inflow looks really good in the first few minutes, let's say, of the ETF trading. But I think it will trigger something bigger for altcoins.
I agree with that. Now, the next question here, and everybody, so you all know, that anybody that's been watching here for a while, we got a great community. I've been sharing Quinten's charts. I'm sure you'll if whether or not you know it, I've been sharing his charts on this stream regularly. So it's so great to hear it from the horse's mouth. So we just, continuing this discussion regarding the Ethereum ETFs, we have this chart right here. This is Bitcoin ETFs. The reason why I bring this up is because I was just discussing how we kind of had like this epoch one here. This was Q1. This also was marked by a huge amount of capital rotation out of the Grayscale ETF being met with a lot of buying. And then you can see once this subsided, now we're in this phase now where I feel like we found equilibrium and we're starting to get, just, I don't want to say honest appetite, but it's true buying into the ETFs now that's not marked by rotation. Do you suspect that we're going to see something similar like this with the Grayscale ETFs, Ethereum ETF, or do you feel like they may have mitigated it by doing the mini ETF with that nominal fee? Like, how are we supposed to project and sort of understand what may come with this?
I'm not sure if you will see like the same thing that we have seen with Bitcoin, so that Grayscale was, for example, dumping and the other ETFs were absorbing. I don't think it's going to be that case, to be honest, also because I think relatively seen, Grayscale holds less Ethereum percentage-wise than Bitcoin, if I'm not wrong. So I think like the impact can be even a lot smaller. Plus, I think we already been through this FUD with Bitcoin, as you mentioned. And eventually the effect was less big of what people expected. So I think the fear and the price drop that comes with the fear will not happen if the same scenario happens with selling off Ethereum for Grayscale. So I don't think it will be the same thing.
Well, I mean, that's good news, because if we look at, I'm pulling it up here in 1 second. If we look at, for instance, this Ethereum ETH to Bitcoin chart here, and this is relevant and not. These halvings are just helping keep tabs of where we're at, where we're looking at here. This, where my mouse is here, goes back to June 2016. And this trend line all the way December 2016 held support all the way through till now. I mean, 2016 to now, was that 8 years? and we can see that we obviously had traded below this for some time. But do you suspect that this cycle will see, because there's an ongoing debate. Benjamin Cowan, one of the most respected people in the space, has this idea that the Bitcoin dominance is only going to go up likely from here, maybe even into the 60% zone. Whereas a lot of other people I talk to speculate that it's in some ways less likely because the market is so much larger and there's so much more, not only infrastructure, but integrations being utilized outside of just the storing of value. And I mean, we saw this firsthand and all those side events that we were at ECC in Brussels. So what do you suspect, like you as an investor? I mean, you're an avid investor, a trader. You talk about markets all day long, every day. And you're one of the first crypto YouTubers. How are you sort of projecting the altcoins interaction with this market as it relates to Bitcoin? Or should we start looking at them as two separate asset classes and not always just be tracking dominance in this sort of almost tertiary sort of thing?
Well, first of all, I think the Bitcoin dominance, it can go anyway, of course, but personally, I don't think it will go towards the 60%. We nearly hit 57%, which is a very important level historically, as far as you can do some TA on Bitcoin, because on the Bitcoin dominance, because there's a lot of other factors playing there. But personally, I see the Bitcoin dominance going down for most of this cycle. I don't expect it to hang around 60%. I don't expect it to go over it, but of course we don't have a crystal ball, so I'm not sure about it. But I think if we look at the sentiment, and also if you look at the historical cycles, and especially in psychology during certain stages of the cycles, then normally from now onwards the focus should shift more and more towards Bitcoin. Historically seen, this is at this time of the cycle, Bitcoin is at one of the highest levels and goes down from there often. So yeah, I think Bitcoin had its. My cat is actually standing here. She wants to go inside, and I cannot concentrate. She's meowing all the time, and I'm like, gosh, someone should let her in. Anyway, that aside. Yeah, I think this is at this time of the cycle to say that we will see Bitcoin go up in dominance even way more than it is right now. I don't think so, especially because what we've seen in the past 6 months, and that this full focus on Bitcoin, altcoins were getting slaughtered since March again. So yeah, I think I don't see even more and more focus going towards Bitcoin. I actually see the contrary happening. We have the Ethereum ETFs now. This is of course a very big step for the maturing of altcoins as well. And probably we have the application already for a Solana ETF that is on the table. This is probably not going to happen in 2024, but still, it's a sign of altcoins are maturing as well, and more focus will shift away from Bitcoin. Bitcoin had its time to shine last 6 months, and I think it will. Yeah, I think the Bitcoin dominance will go down over the next 1.5 years, let's say.
I mean, I agree entirely. What I was showing here on this chart for anybody that is wondering, and these things are all subject to change. This orange line right here is Bitcoin. This the candle pattern behind it. This is a total 3, and these are overlaid perfectly on top of each other. This is why when everybody's wondering, Bitcoin's going up, why aren't my alts pumping at the same speed? I mean, look at the difference in time here. This is almost 100 days difference of Bitcoin ripping and then altcoins. However, I do think, especially with the Ethereum ETF coming in now, we have to, and you've been talking this for years and breaking this down in charts. No matter how perfect a signal is, things will change as context change. And there's been a seismic shift in the context of these markets in the last 1.5 years alone. I mean, let alone 8 years ago or more since I've been in. So, I mean, I got to twist your arm though. I mean, I see you got your screen shared there in the background. Show us what you're looking at. What's on your radar? What's going on in your trading view? What are you focused on?
I don't know if I can switch tabs. Actually, I was looking at it. Maybe I should like stop sharing for now and then share again my other tablet, my tab. Wait 1 second, I will do
Yeah.
that. So, because I want to share this one.
And as he's doing that, everybody, you can make sure you
All
go
right.
and follow him right here at Quinten Francois. As I'll post it there. I think Alexander G, can you post that in the live chat for people to click on? Make sure you go give him a follow. And he does have a wonderful YouTube over here at Young Investing. So make sure you give him a follow there as well. And we'll throw it to your charts now.
Thank you, Kelly, for the promo. But yeah, I mean, like this is always something that I'm showing to everyone, and this is also like the thing that I like the most about about crypto markets. That is the macro outlook and the cycles. And I think if we have a look right now where we're at in the fifth, I mean, like some people say it is the fourth cycle. I calculate this first half a cycle here as well. So in my opinion, is the fifth cycle. But we see the same thing happening all the time. So let's talk a little bit about the outlook for Bitcoin in the next, let's say, 1.5 years or so. And it's always the same thing. So what's happening every time is that we have like let's start here. So we have like some kind of accumulation stage where the price goes sideways for a bit. Then we have the year of the halving, where the price moves up for the first time, goes towards the previous all-time high, which you can see right here. So here is the previous all-time high. So we move towards that point, and then when it breaks, we have like the parabolic stage of the last year of the cycle. And then, of course, retail interest is the biggest. So everything goes up a lot, but altcoins go generally up even more during this stage. So we have then the third year of the cycle, and then we have a bear market, more or less a year of prices going down. So this is actually like rinse and repeat every time, the same thing happening. As you can see, like here again, we have sideways movement for more or less a year, going up a little bit. The bottom is clearly in. Then the next year, the year of the halving again, here it moves up towards the previous all-time high of the cycle before that. Then 1 year of, at the moment that we break through the previous all-time high of the previous cycle, then we move up for a year, and then a year of bear market. So it's literally like copy paste every time. So you can always find reasons why this time it would be different, or this time it would be a super cycle, or this time this, or this time that. But the thing is, with every cycle, there is some new stuff that triggers why this cycle happens, why it happens. So these reasons are not reasons why it would be different. Either these reasons are reasons why it's going to happen like it needs to happen, you know? So I think that's also something that people are often a bit too euphoric about. Like same thing with the Bitcoin ETFs now, with the Ethereum ETFs. They say like, yeah, right now it will be different. All the financial institutions will get in. No, this is just the reason why the cycle will play out as it's always played out. This is just like the new reason why. So same thing now. We had 1 year of sideways movement. Then this year, the year of the halving, 2024, we moving up and broke already the previous all-time high of the cycle before. So what I think will happen next is that next year we will move towards this blue box right here, which is between 200K, 300K, something like this. I think we will move into this box, both in time and in price. I think we will end up in there. And then, of course, I don't want to talk about it already, guys, but maybe we will see like another bear market for a year after that. So this is how it always plays out, and this is like something that I really like to talk about. And the main reason why is because I truly believe if you understand the crypto cycles, if you understand the psychology behind it, so the Wall Street cheat sheet and so on, if you study that and you understand truly how this works, and you can do like the reverse psychology of these cycles, then you are going to beat like 95 to 98% of the people in terms of making profits in this market.
Well, let me ask you a question on that regard, you know, because one of the things that I don't want to say I struggle with, I try to remind myself daily, being like you, whether we like it or not, we're voices in the space. And I try to remind myself on a regular basis that we all need to realize that as obvious as some things are, there's a majority of people that probably may not know it, especially exponentially over the next 5 years, where every cycle we're going to get a disproportionate of new people coming into the market. So to me, it feels like you look at that chart once and it feels understandable. And yet even people that may have seen that get trapped by it. So, I mean, to me, that's a signal regarding the mechanisms in this market, not just crypto, all markets, about the mechanisms of fear and greed. And so looking at the market right now, I mean, I shared on the thumbnail of this post, I took a screenshot of just a tweet that you posted that essentially said, this is the most bullish setup ever, or something to that regard. So is there any concern you have right now, or does it not matter because you have a long-term view in terms of a potential washout, especially with all these institutions and big money coming in? Is there still an opportunity for a likely big washout, let's say sub 50,000, or do you think that the foundation is strong enough that more likely than not saying it can't happen, but more likely than not, it's going to be essentially melting to the upside from here?
Well, we came very close to 50,000 not too long ago, like a few weeks ago. So we've been to 55,000. And actually, we were talking about that with a very good Belgian beer in our hand as well, Kelly. But I actually, it's possible, right? I mean, you never know what the next trigger will be for something like this to happen. There can be some news again, or there can be like a ban here, or like someone offloading Bitcoin, or like a hack of a big exchange, whatever. Like some stuff can happen. We don't know. There's always like the potential of like a black swan event or an FTX kind of thing. But I think in normal circumstances, I personally don't see it going back towards like below 55,000 where we've been a few weeks ago. So yeah, I see it actually going only going up from here. I think Bitcoin will have a pretty boring summer, rest of the summer, because I think the focus will switch a little bit. The euphoria will go towards Ethereum for the launch of the ETFs. But I think after summer, I think Bitcoin is going to pick up again, going into the elections, which are in November of this year, the US elections. I think then it's going to really start gearing up again. But I think in the meantime, between now and let's say September till November, I think it can be really fun for altcoins especially. And I don't see like a big washout happening anymore without an external trigger or black swan event even.
And if not, then you got that sign behind you that you got at that meeting that we were both at. You can look for a job at McDonald's again.
Yes.
But so that being said, we talked Bitcoin, we talked ETH, we talked a little bit broadly about alts. I know, at least I think that you're not just a Bitcoin and ETH maxi. I see you posting charts regularly about Chainlink. I see you talking about Solana periodically. What are those the two primary altcoins you're focused on outside of Bitcoin and ETH? And is there anything else, any other niches that you feel like some exposure is probably garnered, coming into the next year and a half, for this cycle?
Yeah, I mean, definitely Bitcoin, Ethereum are my biggest holdings. And then, as you mentioned, Chainlink, Solana. But it doesn't really mean that I think the biggest gains are into these ones. It's just like a matter of the risk reward, like the risk is very low, but the reward can potentially be very good. We saw Solana doing a 10x last year, right? So this is actually like why I have them as one of the biggest holdings, like my biggest altcoin holdings, but they are not per se the ones that I believe in the most, right? Because I have some gems that I look at as being potential 100x's. And if we talk about niches, but
this is
especially
not
look
financial. This is not financial
yes,
advice, everybody.
Financial advice. But there are a few good ones that I'm really, really interested in. But we can especially find them back in the AI industry. So, for example, Fetch.ai, I'm already holding since ICO. So the first few years, this was extremely boring because nothing happened. But like right now, it's very exciting with the merge with the two other projects, with Ocean and Singularity. They're now artificial superintelligence. This is one that I truly believe in. But I especially look at the AI space, and maybe it's like very boring answer because everyone is looking at the AI space, the AI niche within crypto. But this is like something that I'm focusing on, real world assets as well, deepen, and gaming infrastructure. I also really like. So these are the main niches that I'm looking at.
So it's like AI is an interesting one. I think everybody, it's broadly talked about within the crypto ecosystem. And one of the things that I keep going back to and is the infrastructure that would support that niche, right? And depends part of it, but looking at things like render, which is GPU, the processing power for which, especially is, I talked about it last night on a Twitter Spaces. CrowdStrike was actually a blessing in disguise for our industry because it screamed of the necessity for decentralized distributed systems that can protect data, but also make sure that there's not a single point of failure like we saw with CrowdStrike. In fact, Delta is still having issues getting flights off the ground. Almost a week after that, or was it 3-4 days after that issues happened, and it's because of that single point of failure. And so when I'm looking at the AI narrative, one of the other things which was kind of brought on my radar more recently was Aether, which is, and I'm not recommending anybody go buy it because it's a small market cap, newer project. However, if you go and look and do some diligence on it, they're doing, I don't want to say something similar to Render, but similar in terms of that distributed shared GPU technology that can be utilized for AI or data systems. Or, there's so many different things that as the world integrates into blockchain on their systems, it's not just retail coming in to buy that's going to pump these projects. It's where is the infrastructure going to integrate within the blockchain ecosystem, because that will drive real transaction volume, utility, and also bring institutional investment. And then unfortunately usually retail follows and makes a lot less money. So what would you say, because you have your show Young and Investing? I know that you're not only just a trader and investor in crypto, but you're also looking to decipher all the noise out there for new projects that are coming out. So how do you sort of marry your knowledge of picking a coin to trade and invest in crypto, but also take an investment position, in funding and being an early investor in some of the companies that are also building in the crypto ecosystem? What's your fundamental sort of lens to decipher the noise and pick good projects?
I think it's just like fundamental analysis. I'm still basing most of my decisions just on fundamental analysis. I actually come from a background when I was 16 years old. I started investing in stocks, and I also started doing fundamental analysis. And I'm still doing that, but it's of course not the same thing anymore, because back then I spent a full day researching something. And right now it's so much different because I do this fundamental analysis based on more of a gut feeling. I don't think about it anymore. It's just like my gut feeling says, okay, this is a good opportunity, this is not. So I think it's just like a matter of doing this for 7 years full time already, that I'm not like spending too much time on it anymore. It's more based on gut feeling, but behind the gut feeling, it's a fundamental analysis that I still do for every project. So yeah, go ahead.
I was gonna say on a technical level though, remembering that there's so many people that haven't been in the 7 years, are there any, for instance, tools or resources, and especially if you have any free ones that you utilize if you're like looking into a project to try to gauge, volume or fees or anything that give you signals beyond just looking at charts? What sort of tools are you looking? Are you using DeFi Llama? Are you using DApp Radar? Dune, Glassnode? What sort of tools are you looking at? And could you pop one of them open and give us an example?
I actually use like a lot of these ones that you mentioned, but I don't do it for every project. Of course, it needs to be applicable, because most of the projects that I invest in right now are very well established projects, and the ones that I invest in right now that are not like well established or not like very big yet, where I'm not like actively doing, for example, the big ones, I'm not actively doing any research on it anymore. It's just because like the research comes in over time. I'm not like doing or using like any external website or so on to do some further analysis. that just happens. I see that content and info coming by. But like for the newer projects, this is often also not applicable because these are ones that often are not on the market yet. I'm very careful with the ones that I do, like in ICO. I just do a few ones. For example, Aether, as you mentioned, is one that I invested in ICO, but it's only just one of the few ones that I did this year. But it's also, I think, more based on the conceptual thing of it. Like you explained, it's very close to what Render is doing. We know that this is needed because of this and this reason. I base my decisions on that. But I mean, like the ones that you mentioned, for example, like June analytics and so on, I use for very different stuff. For example, like the Bitcoin ETF flow, I'm always following there. It's more the macro stuff that I follow via Glassnode, June, etc. And then via DappRadar, DeFi Llama, all these websites, the specific projects that are applicable for doing some research there, I'm using them as well. Yeah.
I mean, it's one of the things that when you've been doing this as long as we have, it's very like I want to throw as many ropes out to the newcomers as possible. Because I remember when I first got, because I was started trading like 2012 traditional assets, and it was nothing to write home about. It was just kind of like dipping my toes into the water. But that slow burn into then diving into crypto, and even that was still a slow burn. And then I traded 2016, 2017. I was such a good trader, but I also, that's lack of humility. I was in an uptrend that you really, if you're messing up, you're just an idiot, because basically you take a trade, and even if you go negative, 3 days later, you're going to be positive. And, I traded into a pretty good portfolio. And then I said, you know what? I'm going to be rich next week. I'm going to start trading leverage. And I lost almost $100,000 in the matter of like 6 minutes because I didn't adjust my risk management on there. So, but there's so many different things. The point here is there's, Glassnode, look into bitcoin.com, check on chain, DeFi Llama, DappRadar, Dune Analytics. And I think it could become overwhelming to newer traders, because they're also saying, we're talking about all this. They're like, and pardon my language, everybody, but they're like, we're talking about these deep technical data points, and they're stuck on what the fuck is a candle. Like, you know what I mean? We're talking about, bearish diversions with RSI and the MACD. Like literally it's another language. So what would you say to newcomers, whether it's 1 week or 1 year, if somebody's, foraying into this market and they're frustrated at all, what would you say to newcomers as, something that they can do, in terms of in the markets themselves or education or whatever, and also a mindset point to make sure that they can keep themselves on track?
I think the most important thing is to just start investing and having skin in the market, but just stick with the big projects. Just stick with, I mean, like, not financial advice, obviously, but I think it's a good idea to like just stick to the top 10 for the first half a year. And maybe after half a year, if you have been doing a lot of research, if you have been following the market, if you have a little bit of feeling with the markets, with a lot of projects, what is needed, all the niches, etc. I think like from day one, you don't have any feeling at all with that. Exactly the same thing with trading, with the story that you gave about trading, right? I think it's important for at least half a year to stay with the biggest ones, and then maybe like start to diversify and start to like dip those in like a bit smaller projects outside of the top 10, but still stay in the top 100. And I think like after some time, it will be a natural thing to have most of your portfolio in safe stuff and then take some more risks with like a very small size of your portfolio. For example, for me personally, I have 80% of my portfolio in Bitcoin, Ethereum, Chainlink, and Solana. So that is 80%. And the other 20% is more risk on, but it's still like Fetch and BitTensor and all these kind of big projects anyway. But then a very small percentage of my portfolio goes to trading and like investing in ICOs and so on, because that is the most risky part. ICOs, 80% of them fail eventually. Probably, if you look at the longer term, it's going to be more. It's going to be 95% or more, but like 80% already fails in the first year. So it's very, very risky. Stay away from ICOs, I think is very, very important as well. Stay away from leverage trading in the beginning, or do it with a very small amount of your portfolio and do it with low leverage, just to get like a feeling of, or a better feeling of the markets. How does it behave? How does which sentiment feel and which price action comes after it? Like all this kind of stuff you will also learn by trading, but it's not a good thing to do it with too much of your portfolio. So yeah.
No, I mean, I agree with all those points. So we're talking about all the bullishness that's in the market, generally right now. We're trying to pepper in these lessons and pepper in. And the funny thing is, to me, everybody wants to know what's the price doing on this 1 hour chart? Where's it going next? And they forget to look to all the things that, and all of us are a victim of this. I'm not calling anybody out. I'm calling all of us out. All of us have had parents and friends that have told us things in our youth that we're like, well, that's not me. And then that thing happens because we're not willing to learn from those that come from before us. And so I want to just mark that with all of us. One of the number one things you can do in this space is to find humility and gratitude. I just told you about that massive loss that I took. It was because I lost humility and I wasn't great. I wanted more. I wasn't grateful for what I was already doing. So with that being said, and how bullish this market is, let's bring it back to the bullish thought here. Everybody is so excited about the price going up. Yet, I would venture to guess over 90% of the people in the room, or people in crypto in general, don't have any sort of idea of a true strategy for an exit plan. So what is your, like, if you're looking at, let's say, I don't know if you're going to exit 100%, 30%, whatever. When you do look to start to take profits, what are some of the things you're going to be looking for in the market to signal, okay, my lens is on? And then once your lens is on, just to identify that target, or the trigger, I should say, what's a broad, something simple, not a super technical thing, but something you think folks could generally pull up, whether it's MACD and RSI, whether it's an on-chain metric regarding the MVRV hitting a zone. What are you looking for a trigger to say, I need to start looking at rotating out into another asset?
I actually thought I made a video on it, but it's not true recently. I thought it was like a few months ago, but it's probably a few years ago. But anyway, I have like a very specific way to create my exit plan and to start taking profits in this market. And it's also like, it's not something that will give you like certainty to do it very well, but it's like something that will, if the markets move up, then you will definitely have a balance between still skin in the game and getting out of the market partially. So I base my exit plan on 3 pillars. And the first pillar is, of course, Bitcoin price. I take a few Bitcoin prices, and when the Bitcoin price gets hit, then you take out 25% of your portfolio, but your entire portfolio. So not only Bitcoin, but also the rest of your portfolio. So you take that out, then wait for the second price target to be hit for Bitcoin. Take another 25% of the initial amount out. Then you have 50% of your initial amount out. Then if the third price point is hit, another 25%. Then you have 25% of the original amount left. And from that point, you start selling like half of it every time it moves up to a higher price point to still always have skin in the game. But I think it's also important to have a backup plan there, because you can base yourself on the Bitcoin price, but you never know what crazy stuff will happen, or like some altcoins that will do crazy stuff. So I think it's also good to do the same strategy with 2 altcoins. For me personally, I do this because of the obvious reason that it's my 2 biggest altcoin holdings with Ethereum and Chainlink. So Ethereum and Chainlink are also some backup plan, let's say. And if they hit like a certain target as well, you take 25% of your portfolio out. And then like the first target of Bitcoin just like gets like liquidated as well, let's say. So you take it out if, for example, Ethereum hits a certain target first, or Chainlink hits a certain target first, just to make sure that maybe like altcoins are going to perform very well this cycle and not Bitcoin. Maybe Bitcoin is never getting to that point, but it's like some backup plan. And then the third pillar I have, the same thing. So whatever is hit first, you take 25% of your portfolio out and you go to level 2 of your plan, right? So I still have a video on it from a few years ago. You should look it up if you want to. I have this exit plan video. But anyway, the third one is a safety net, and that is the time-based target. So let's say Bitcoin and Ethereum targets are not being hit, and you still are like full-on skin in the game, 100% in crypto, but things are not going or like falling out as you would expect them to go, because we have the 4-year cycles and it's getting like dangerously close to the end of the cycle. Then I have like these time targets as well. For example, for me, the latest by June next year, I'm going to take out 25%. If my Bitcoin, Ethereum, and Chainlink targets are not being hit, then I'm taking 25% out, whatever happens. So that is actually like a safety net to still make sure you're not like getting screwed over by the market. So that is how I do it. This is the same thing that I did last cycle. So the bull cycle of 2021, I did it exactly this way. I turned off my emotions, which is very, very important, guys. If you want to take profits, it's so turning these emotions off. This is the hardest part for sure. You will always be greedy. You'll always want more.
It's harder to take profits than it is to make your first purchase.
Yes. Yeah. Yes, for sure. So it's a really, really important one.
Well, and yeah, I want to twist your arm if you're willing to let me. I want to twist your arm and just, you don't have to show all the targets, but if you could pull up a Bitcoin chart and just give an example of how you're even like, how does somebody even identify a conservative target? Like, how do they just say, I'm just picking, are they throwing a dart at the chart, or are they doing a fib from top to bottom and saying they're going for the 1.618 or the 2.618? How are you drawing a target for Bitcoin and Ethereum?
Yeah, really, really good question. I think for me personally, how I do it is my first target for Bitcoin at least is not too much above the previous cycle's all-time high. So the previous cycle, its all-time high was 69K, right? So I take a number not too far above it, but also just far enough away from the 100K psychological level. So I'm not taking 100K, but I'm taking, I think I have like 85 or 90 written down in my plan. So as my first target, I think it's 90, by the way, just under the psychological level of 100K. So I'm going to take out some money out of the markets when Bitcoin hits that level. So that is the first one. I don't base myself on technical analysis. And then the second target, for example, is based on 2 times the previous cycle's all-time high. So that would bring it to more or less 140K. That is the second Bitcoin target. Then the third target is more or less 3 times the previous all-time high. I'm basing myself on the increases that I expect and not expect. So it's like a lot taken into consideration, but just under the psychological level of 200K. So my third Bitcoin target is like 190, sorry. And then the fourth target is pretty high. I think it should be like a bit higher because you're like not too exposed anymore. And I'm placing that at 280. So that's my fourth level for Bitcoin. So these are my 4 price targets. But again, the last price target, it's just like selling half of what you have left. It's not like selling everything. It's not like selling the last quarter of your initial portfolio. No, it's like keep a moon back. Always keep skin in the game, because you don't know how far this will go. And you will like really regret if you sold everything. So I'm also never selling everything.
Yeah. And so I just want everybody to realize that even if these numbers are off at all, the point here is that if you are so greedy that you want to you're like, I know it's going to go to 280, so I'm going to ride this all the way up to here. What tends to happen to the people that do that is the price action does perform well. Comes up, comes back, retests, comes up, comes back to retest. It doesn't go in a straight line. For one, it might get to 252,000. And then because it doesn't hit, you saw these retrace and continuations. This ends up doing this. And then you either end up capitulating down here, losing all of these gains, or you end up waiting for 5 years for this to initially not go through the bear market, the consolidation, and then kick back up to. So this is what's called laddering in and laddering out. So you can take advantage of the best average price over the scope of the price action on the way up. And also the same way you identify your targets to enter on the way down. But I want you all to also to notice, I am very technical with how, with how I am picking targets and such. And what he just said, it's a whole different strategy. And the point here is that it's okay to have a different strategy. You got to do something that you're comfortable with, because if you're not comfortable with it, you're not going to stick to it. And I can tell you firsthand, I've met this character in person. He is not only a wonderful analyst in the space, he's the type of person I want to have in my circle as a friend and also discuss charts with, because there's so many money driven people in this market. It's beautiful when you meet people that have made money in this market and money has not changed them. They're here to help. And, you know, at the end of the day, people ask me, I'm sure they ask you, why would you go out here and share all this content on a daily basis if you're making money in the markets? Because this market is so young that the more people do well in this market, the faster this market is going to mature, and the less people are going to get wrecked along the way. So there's some altruism there, but there's also, hey, a rising tide raises all ships. So that's sort of my thoughts on it. Now I know I've held you hostage here and picked your brain here for about 45 minutes. Is there anything you wanted to wrap out with? Anything you got coming up, or anything else you wanted to share with the audience here?
No, I just I appreciate you for having me. I really enjoyed it. I hope that people learn something about it. And yeah, I mean, like, guys, hopefully this is not necessary anymore in the future. So we can only do memes about it. The McDonald's one, but no, it was really great for being here, Kelly. I really appreciate you. I think you're a wonderful guy. You're a very smart person. You're amazing to hang out with. Um, we're grabbing a beer very soon again, so for sure.
Yeah, man, I'm a little bummed you're not going to be at the Bitcoin Nashville, but I'm sure I'll be. Will you be at Token 2049?
Yes, I will be
Yeah,
there.
we'll definitely see you there, and I'll have to have you back on and share some more thoughts and some more charts. And with that, I appreciate you being here. Everybody, make sure you go and give him a follow, and his information is right here at Quinten Francois. And it's down below in the description. You can also find his YouTube channel right here. He's got a lot of great content on here at Young Investing. And with that being said, I do want to just shout out our channel partners, CoinW. Make sure if you want to get into trading and training with us, it's basically live stuff. It's free. All you got to do is sign up with that link in the pinned in the description. Of course, also our channel partners here, Arculus, getarculus.com. Make sure you're protecting your crypto. One tap to swap, trade, and store your crypto. Getarculus.com. Use code lab10, lab10 for 10% off. Again, Quinten, thank you for being here. I appreciate you. I hope you have a wonderful weekend. We'll be pumping out content live there from the conference. So I'll be reaching out to you again soon to bring you back on and talk shop with the friends and family here. Everybody, thank you also all for being here. And as my dad in the chat said here, bring me a higher low. Everybody have a wonderful day. Adios, muchachos.